Greetings once again. This is Greg for Tesla Fan Insight. The focus of my talk today is on, is Tesla a Ponzi scheme that's just pouring a lot of cash in where investors lose all their money? Bonjour, wie geht's? Verstehst noch im Ostbeinen? Strasvice, ni hao ma, buongiorno. This is Greg for Tesla Fan Insight. My talk today focuses on a question being asked by many. We addressed in my first video the Bob Lutz suggestion of Tesla going out of business. And in this episode, I really wanted to jump after a comment that had made by the CEO of Autonation that Tesla is a Ponzi scheme. Now, to review, for those who don't know what a Ponzi scheme is, basically you take investor money at the front end, and then instead of building or investing any of that money, you simply return higher returns to those investors when you bring in new investors at higher valuations. So, you could kind of make that argument with Tesla because there were folks that were buying Tesla at $5 and $10 a share. The stock is now at 300. So in theory, the people buying the stock at 300 are giving a nice return to the people who bought the stock at $10 a share. I'd have to say that in most Ponzi schemes you see, there aren't thousands and thousands of customers of all types, if not hundreds of thousands of customers, that have products that are reflective of the money that was invested being poured into a real company. So I know that another portion of this argument is the fact that the actual book value of Tesla is about $30 million, but might be $30 billion, but the stock is currently, it's down a little bit, but let's say it's in that $40 to $50 billion range. And so this is another argument against its current valuation and whether or not Tesla is in fact somewhat of a Ponzi scheme or about to go out of business. There's a whole bunch of sort of response to what you might be able to claim as a Ponzi scheme that I think are all valid. We could start with the fact that right now, based on where Tesla's at, part of the huge valuation is that whenever you look at a stock, you're basically looking at the growth rate of that stock. So you take the current earnings, which I guess for Tesla is zero, but they're retaining everything to reinvest it. And then you multiply it by the growth rate of the company to figure out what the real sort of value of that company is. In this situation, one would have to argue that as Tesla is able to get their current factories completed and executed, they have a situation where they have the potential to generate very large earnings. And a further confirmation of the fact that their positioning is solid in the marketplace is the fact that there are so many competitors, small and large, that are being forced to change their operating structure to embrace the strategy and approach that Tesla is using. So I thought this was very interesting because I'm continuing to get flack from some of my viewers regarding the stock price is too high, the book value is X, and the current stock price is Y. There's a wide gap there, therefore the stock price is going to fall. I don't agree with that. I think the stock price is going higher short term, and long term I see the stock going significantly higher because I think there are a lot of good companies like Mercedes and GM and all these big makes that have to change their operating philosophy in order to compete with Tesla. So I believe that Tesla has an advantage battery-wise and battery scale-wise. So I think they definitely have a 2-3 year edge on folks. But to be honest with you, I actually think that edge could last for a good 5 to 7 years, particularly if you're talking large numbers of vehicles/batteries. So what all this adds up to is the fact that I think one could argue and collect data to suggest Tesla is a Ponzi scheme because the early investors have gotten back some nice returns. I do believe that part of the challenge that's going on here in evaluating this whole situation is that Tesla is actually a tech company, so to a large degree. And what that means is that most technology companies tend not to carry any debt because they generate heavy profits, and it's a risky situation that investors don't want to get involved with. But I believe that there's a lot of arguments I could continue to make for why you could line up Tesla in the Ponzi scheme department. The challenge with that, though, again, is that you've got real products, you've got a real competitive advantage, you've got customers who are willing to wait and pay a premium to buy Tesla's products. So I just think that there are a number of competitive advantages that they demonstrate. And it's rare if you have a Ponzi scheme, can you actually drive the finished product of that Ponzi scheme. So if you truly do believe it's a Ponzi scheme or it's a bad company, you should, next time you see a Model 3 X or S, ask those customers what the buying decision was made on that vehicle to see whether they're happy or not with it. Another component of this that comes to mind, at least from the investment standpoint, is just the fact that there are a lot of people who've taken the time to carefully review their options before purchasing a Tesla or getting on the waiting list. And I think the type of research it took to arrive at that conclusion is the same type of information one can use to actually make a decision about purchasing the stock. Because if it continues to rise and Tesla keeps offering solutions in numerous markets that are really appreciated by those customers, I think there's a potential there to make enough money on the stock to actually pay for your car. And so you get a better benefit out of this by being sort of broad-minded to consider the fact that it's a great company, well-positioned. Even though they're burning a lot of cash right now, it's well-positioned to do extremely well. Another note on this is that one of the biggest challenges with evaluating Tesla, particularly for executives at huge companies, is the fact that the parameters for how the marketplace values companies has not been kind to the big makes. And the main reason is that their products are fairly comparable to each other. They're not growing very fast, their sales. And in the case of products like Tesla, they actually don't have real solutions that make them competitive for what it is that customers really want to see as products. So I don't know if any of you have taken time to look at some of my other posts, but one of the interesting sort of back and forths I'm having right now is with the owners of some Lamborghinis and Ferraris. And as you've seen in these videos, the gas or oil change on a Lambo or a new Ferrari is $6,000. And to have a tune-up at 15,000 miles is $30,000. So folks are willing to pay this kind of money to have a pedigreed vehicle that is awesome to drive, but at the same time a pain in the neck to own. So what's interesting to me is that these owners are saying, I love the car, I love the performance and the prestige of the car, but there's a price that comes with having a car that performs this well and distinguishes itself as quickly as a Ferrari does. The challenge with this, though, is that what the Tesla and new competitors for the Tesla in the high-end vehicle space are going to bring with electric is the ability to enjoy your car more and have it at the dealer or mechanic less. And so as these solutions come in, I think it's really going to put a crimp in the lives of the biggest name brands of cars. And the customers are going to be really happy because they get beautiful performing cars without all the headaches. This is Greg for Tesla Fan Insight. I want to thank you once again for taking time out to view. Please like and subscribe. Tschüss, macht's gut, au revoir, à tout à l'heure, aleit rahot, hoda hafez, and shalom. Thanks and have a great day. Look forward to our next opportunity.